He made one mistake. I'm not a former model. I still do it. It is in the senior division, though, just so you know. No, it's not the pins. Come on, guys. Right. I would like to have the panel come on up. We will allow them here in a moment to introduce themselves and give you a little bit of bio. My name is Charlie Harris. I am with National Health Insurance Company. We are a wholly owned subsidiary of Allstate, and if you look at our brand, we're known as Allstate Health Solutions. I am your moderator today, and I have the honor of working with this panel here, and I will be asking them a series of questions. It's interesting. Those of us who have been in the business for a long time know that we go through change every once in a while, right? It happens on a regular basis for us, and we're getting ready to have a dynamically changing landscape this next year. And so what we've done is we've assembled a panel of seasoned veterans that's going to help and guide you through the changes that are going to occur. They're going to give you current trends, current expectations, current ideas of what's happening. But I think if you listen very, very carefully to them, you're going to get very valuable insights on how you can plan your strategic and tactical goals for the future. So I'd like to introduce our panel right now. So I'll start with Jeff and let him give you a little bit of information about himself.
Jeff Smedsrud. I'm CEO of Flex Benefits with a great team. Brian and Pam are with us. Flex Benefits, new company solving problems for those that have high deductible plans under the ACA plans and also under Medicare Advantage. My background, I know most everybody here. I'm co-founder of healthcare.com. I was the original CEO of IHC Specialty Benefits, founder of Pivot Health, founder of a pet insurance company along the way. Thrilled and honored to be here, and this is truly a wonderful venue that is run so well and has been for so many years.
Thank you. Hi, everyone. Good afternoon. My name is Susan Plumer. I am the Chief Growth Officer of ConnectureDRX. ConnectureDRX, for those of you who don't know what we do, we are celebrating 25 years as the market leader in quoting, shopping, and enrollment for all things Medicare. So our customers kind of span the market. We have over 66 health plans that use our technology in some way, shape, or form, whether it's hosted or APIs. We have 120 agencies and 125,000 agents that are currently using our platform. Also, I kind of like to call us the matchmaker in Medicare when I talk about ConnectureDRX, because we have the largest network and the most plans on our platform, having over 160 plans consisting of Medicare, Medicare Sup, value-based care, ancillary plans, and many, many more. So that's a little bit about us, if you didn't know us, and really happy to be here. Thanks for the invite.
Terrific. And I am Brendan McLoughlin. I am the president of E123. You may have seen one or two E123 signs around. We are huge fans of ICMG, and I just want to thank everybody involved. This is by far the most important conference for us every year. E123 is a distribution management system that focuses entirely on health and really sort of the top end of the distribution value chain. So focusing on the big FMOs, the top line FMOs, and the carriers to try to pull everything that they do together into a consistent source of data from the carrier all the way down to the kitchen table agent or to the call center rep. The software does things like commission management, agent onboarding, your hierarchy management, book of business, your agent portal. We can do billing, invoicing, member onboarding, enrollment. It's a little bit of a distribution network in a box, the technology that you need. And just by way of background, so you know a little bit about me, I started off life as a computer programmer. I studied AI in the 80s, way before it was cool to study AI. I was outcast for it. But we've made incredible progress, but the the real core tenets of the way that computers can help us hasn't changed a whole lot, right? The speed, the ability to store data, that's changed a lot, but the way that we use technology to make us successful, that's something that for the past 35 years has been pretty consistent, and that's what I'm looking forward to talking about today.
Awesome. Well, let's start with Susan. How about that? What cutting-edge technology trends do you believe will most significantly transform agents' ability to manage their book of business amidst the regulatory changes and evolving plan offerings in the senior market? And how can companies like ConnectureDRX support this transformation?
Well, first off, having one place with all of your information is incredibly important when managing, for an agent when managing a book of business, and speed. Agents need information and they need it fast. This year, or last AEP, I should say, was, we call it the year of disruption, right? It was just, we were planning for it, but no one could have planned for what really happened. And so, 92% of consumers or beneficiaries received ANOC letters, which meant 92% of beneficiaries needed to make a plan change. So agents, if you hear the word agent fatigue, that's very common now. They were just exhausted with having to deal with all these plan changes, formulary changes, and of course, in the middle of AEP, there were plan suppressions and non-commissionable plans. So it was things that agents hadn't dealt with ever in the past. One of the things that we are doing, and I'm excited because we are sort of ahead of the curve on this, is we are launching a active analytics platform that will give agents insight into their book of business and those consumers that are needing a plan change or a formulary change or or different providers. We'll have that information in the hands of agents before AEP, during AEP, and after AEP, making this platform an everyday platform and not just something that they will look at once a year.
Awesome. Brendan, Jeff, you guys have any other comments on that?
Not right now.
Not right now, Brendan?
Yeah, I'll chime in a little bit, and actually the very last thing, Susan, that you talked about is exactly what I think is the technology trend. One thing that's notable to me, I used to work at Johnson & Johnson, marketing pharmaceuticals and over-the-counter drugs, and I had systems that told me from supply chain through the production line to the warehouse to the store shelves at Walgreens and CVS exactly what was going on. All of that data was in a single source. And I shared that data with the buyer at Walgreens and the buyer at CVS, and I shared that data with my ad agency. And you look at health insurance distribution, and it's all these siloed systems that aren't sharing the data. And agent fatigue is your number one enemy. And a good agent can write 6, if they're in the field, or 15 a day during annual enrollment. You want those to be your business. You don't want one of them to be staring at the wall out of frustration, right? So empowering agents with the data that they need to make smart decisions and make their lives easy, it's the number one thing they ask for. They say, the people above me know what's selling, what's going on, and they won't tell me. And the reality is we know that it's just not available. The data is just not available. So technologies that pulls the data available from when they hit enter on an app, through acceptance rejection, or rapid disenroll, through renewal, through billing, through first payment and multiple payments, through the whole life cycle of that customer, those are the technologies that are going to give you an advantage because you're going to be able to give your agents better information to sell.
Awesome. All right, Jeff. With the potential systematic changes to health insurance subsidies, ACA alternatives, and Medicare Advantage, how should insurers and marketers adapt to the evolving landscapes to meet consumer needs while staying compliant with regulations?
Well, there's a number of things. I have spent a lot of time in Washington, D.C. over many, many years and have been involved in an advisory capacity with what the Trump administration may do. So maybe I'll start an answer to that question as to what we might see going forward. And in my opinion, it's not a question of if, it's a question of when. You're going to see some loss of subsidies for a certain segment of people within the ACA market. It's probably 1 million to 2 people, not a wholesale, let's get rid of subsidies. You're going to see more movement on the higher income to have subsidies made available and replaced to be used by individuals to supercharge their HSAs. You will see short-term medical return at some point to pre-Biden rules, or maybe even a different set of rules. And on the short-term medical, there's really 4 paths to see what could happen. It could happen very fast or over time. Very fast, there's a lawsuit pending right now that could be vacated. Decision could be made as early as the next 2 to 3 weeks, sometime in February, where a judge tosses out the Biden rule, and the new Attorney General's office and the new Justice Department chooses not to fight it. A second option, not quite as fast, there's a little-known law called the CRA, Congressional Review Act, came into play during the Clinton administration, that allows a government, Congress, to have a simple resolution, up or down vote, to negate any regulation that was put in place in the last 6 months of the previous administration. Only been used a few times, but since you now have a Republican Congress, both on the Senate and the House side, that's certainly a possibility. Most likely scenario would be towards the end of the year, where a new Trump rule is vetted and goes through the process, and will probably look a great deal like the old rule. And then fourth, although people think it's fast, it never is fast, is there's been bills introduced in Congress to streamline and change back a lot of the rules on short-term medical, fixed indemnity, and others. Those should be simple. They always get bogged down, and there's all sorts of trapdoors. So those are some of the things that might happen on short-term medical. I also think you're going to see a movement to expand ICRAs to facilitate the development of gap plans as qualified moves under ICRA. You will probably see a move towards making Medicare Advantage the default option for those turning 65. And the simple reason for that is Medicare costs you and I, the taxpayer, roughly $840 billion a year. Half the people are on Medicare Advantage, roughly half the people are not. Medicare Advantage is going up 4.3% a year in cost. Original Medicare is going up 7.9% a year. So if the Trump administration wants to find ways to save money significantly, it'd be about a $12 billion annual savings. Getting more people push toward Medicare Advantage is one of the levers certainly the government is going to use. And last, I think we will see sometime in the next 6 months the sunsetting, at least I hope we do, and I'm doing my best to advocate for it, the sunsetting of healthcare.gov and Medicare.gov. There's going to be a lot of opinion pieces. I've got a couple op-ed that's going to run the Wall Street Journal saying it's just time to get rid of that. And it saves us about $6 billion, and consumers won't know the difference when they're gone. Only 18% of the people use healthcare.gov, and it's just a boondoggle. It's been that way since electronic direct enrollment went in place. It just needs to go away, and it's on Elon Musk's radar. I think that's going to happen. We'll see how soon. So that's kind of what I think of the lay of the land. Of what's going to happen. My one-sentence word of advice about that is be prepared. Do some scenario planning. We don't know when some of these things will happen, how they'll all fit and move together, but start to think about how your organization adapts if some of these things take place so that you're not caught flat-footed, because if you are, companies like my own, Pivot Health, they'll kick your butt because they're always thinking about what comes next.
Awesome.
I would also just add that I think there's a trend toward third-party enrollment systems like Connectures. Agents don't want to go to 3 or 4 different enrollment systems, and that includes the carriers. So the carriers are seeing such a decrease in agents going directly to those carriers, and most of their distribution is really coming from these third-party enrollment systems like ours.
Great.
Nice.
Brendan? Nope.
No, I mean, we're very much, it's the age of the platform. It's the age of the private platform. A few years ago, it was the age of whatever was the best product design. Different times, there's the trend and the moment. Right now, it's the next few years, it's the age of the platform. Whoever's got the best platform, the most intuitive, fastest, is going to win a lot of share.
Awesome. Thank you. All right, Brendan, it's your turn. Given the expected focus on cost transparency and fiscal conservatism, what tools and strategies should insurers and marketers, what should insurers provide to agents to help them explain pricing structures, navigate evolving regulations, and optimize client retention? And how can agents proactively position themselves as trusted advisors in this shifting landscape?
That is a great question. I don't remember us discussing that during our prep session, so this is just off the top of my head. But so I think the summary of what we might see in the landscape was pretty awesome and pretty interesting. To me, I think the big picture ideas are transparency and competition. Those seem to be the driving factors that are going to make a lot of these decisions. And then there's another little wrinkle that's not coming from Washington, but Blue Cross Blue Shield settled a big lawsuit this fall, and the way that they compete cross states is going to change and potentially open up. It's not exactly known how it's going to play out, but we may see Blue Texas being able to compete in Oklahoma for the first time. So suddenly, competition is going to step up in a big way. Now, so is opportunity, right? And the very first thing that I think the carriers, health plans, the payers of the world need to do is to really double or redouble their attention on distribution. What I see is an awful lot of focus on product and MLR, and those things are very important. And I'm sure there are folks in conference rooms right now saying, if short-term medical is revived tomorrow, how can we create a tri-term product? That's a great question. You also need to ask, how are we going to sell it? How are we going to sell it? And that sales process and winning in that sales process is a local business. Healthcare is a local business. Big brands absolutely help, but people have their doctors, their pharmacy, their prescription, their health system. And competing in that local health system is what's really vital. It is difficult for a big company that's focused on providers and doctors and networks and medical loss ratio to also think about what's the best product for Northeast Tampa or Ybor City or St. Pete, because the answers might be different. Right, and that's where the agency and the agent comes in. There really is this vital relationship between the creators of these products and the channel that distributes them. And I think there's going to be so much opportunity in the next couple of years, 4 years. I think the payers that benefit are going to be the ones that supercharge their distribution. And they can't do that if they're taking paper applications still, right? They can't do that if they're paying commissions by right-clicking and downloading into Excel and sorting on last name, right? That's not going to happen. But the payers that are paying attention to distribution, to saying, I've got 1,200 agents, and 1,000 of them sold 4 during open enrollment. How do I get them to sell 6? How do I get the other ones to sell 20 or 50 or 80? Those are the carriers I think that are going to win as all of this change happens.
Awesome. Susan?
Yeah, I think so. When you talked about agents being trusted advisors, I mean, there, it is so true, right? That the consumers rely on their agents for information. That's why arming the agents with data and making sure that consumers know that those agents have the most up-to-date data of that consumer makes that relationship so strong. That's why the field agent is not going away. So if you look at the field agent versus the call center agent, those field agents have the relationships. They're not, they need those consumers for their commissions and to sell more things. But call centers are churn and burn, and they still are, and they're still bad actors. So consumers trust someone that's sitting across the desk from them or, you know, on the phone that remembers them.
Great.
Yeah, I would completely agree that, but I'll challenge a little bit. All of us as, quote, trusted advisors, we sometimes take for granted what it really means to be a trusted advisor. Being a trusted advisor is not to have Connecture or somebody lay out 9 plans and say, this is the cost and benefit of each of those. Being a trusted advisor means getting to know your consumer, understanding their pain points. What is it they fear? What are their plans and hopes? Why do they want this benefit? And then help them understand that it can be permanent coverage. Help them understand that, you know, you add a gap plan because you want to make sure you're always protected from first dollar expenses, and you can take that with you as you change jobs, and that position yourself as being the resource they call the first time, the next time they have a question, and help them use their benefits. Now, that is a trusted advisor. Showing people 8 options on a spreadsheet, we're not doing our job as well as we could if we consider that. We've reached this point and we don't need to go any further. We need to go a lot further.
Great. Susan? With the changes in the Medicare landscape, how do you foresee these changes impacting the design and offering of Medicare and ancillary products, and what strategies should agents and companies employ to stay competitive and compliant?
First off, compliance is so important in the Medicare space. So knowing that you are working with a partner that knows compliance, has a compliance team, can make sure that you can sleep at night when you're using their technology is very, very important. There has been a trend that we saw last year in agents going direct to carriers and carriers being concerned about commissions. As we know, last year's final rule, when they did the proposed rule, we had about 6 months of stagnation where no one did anything. FMOs didn't know if they were going to still be there. Agents didn't know if they were going to have technology, if they were going to have to pay for technology. So 2 things. Ancillary plans are becoming more and more important as agents think about where their commissions are coming from. I know that for us, it's been a real, it's been top of mind as we add all kinds of ancillaries to our platform. So if you're selecting an MA, you have a HIP right there, or if you need a DBH, or making sure that the consumer is getting the benefits that they need. Number 2 is when we were going through that whole 6 months time period where we didn't know where the commissions, where the marketing dollars, what was going to exist. Connecture launched a new program called Plan Compare Edge for agents. So we typically work directly with FMOs and agencies, but knowing that there could be a time when agents wouldn't be able to afford a solution, we launched a solution that was just for agents at a very, very reasonable price point, because to your point, there's no carrier wants paper. So everyone deserves the opportunity to have a technology and enrollment platform. And even though the final rule never went through as it was proposed, that platform ended up really taking off. And we had, even though we introduced it close to AEP, when that's not really the best time to introduce technology to agents, we had over 200 individual agents sign up and 10,000 enrollments just on that platform. So staying ahead and making sure that you're not waiting till the final rule comes, or till someone taps you on the head and said, we need this. You've got to really be thinking long-term and what could happen.
Right. Brendan, Jeff, anything to add with that?
No, it's the type of thing we need to look at, and we have to understand, to get into consumer behavior, we really need to understand where the pain points are. As a point of example, I could ask this group, in 2005, we were all led to believe that everybody wants unlimited lifetime coverage with no maximums. But how many of us worry about 7 years from now, are we going to have a $3 million claim? We don't even know how to think about that. How many of us worry about hitting our deductible 3 years in a row and having to come up with $25,000 that you didn't expect to have to come up with? And that happens to everybody all the time. So we need to kind of turn our head on what some of the things our products should cover. The age of permanence is over. We're in a gig economy. 30% of Americans change jobs every year. The average person changes job 12 times in their career. Less than 4 years is the average stay at any company. You're changing things all the time. So be able to attach some permanent solutions like gap plans and maybe dental plans that go with you forever. And that's the way to adapt to what people really want, what they're interested in, where their pain points are.
All right, Brendan, with the anticipated push for deregulation and increased flexibility in our product portfolios, what opportunities and challenges do you foresee for insurers to differentiate their offerings?
Yeah.
And how can marketers leverage technology to gain a competitive edge in the member acquisition? And why don't you talk about me privately so we can get that ahead of time before you give this to the crowd? Okay. Do I get that competitive advantage? Just kidding.
So, yeah, I could give a sales pitch for E123 because we do create competitive advantage in building your revenue. But first, so I'm thinking about the things that have been discussed, right? And things get pretty deep pretty quick. But there are probably 3 or 4 big headwinds, or rather tailwinds this time, that I think everyone should be thinking about right now, right? So as there's more of a focus on Medicare Advantage, there will be a reduction in ACA subsidies, but there's also going to be a contraction of Medicaid. So first-time ACA buyers are going to be out there probably in droves, maybe millions. Short-term medical is going to be coming back. Alternatives to ACA plans are going to be more acceptable. So if these are things, Medicare Advantage, ACA, and associated add-ons to ACA, gap plans and indemnities, and short-term medical, if those are 3 things that you don't feel like you're great at, try to become great at them really quickly. It is, it's not really knowable exactly how all of this is going to play out, but one of those 3 at least I can virtually guarantee is going to be very important. And part of agility is such an overused word, right? But it doesn't just mean fast. It means the ability to adjust while you're being fast. So you can't wait until March, April, May and decide maybe this year we're going to dip our toe into MA, right? Decide now, figure out a way to get started this open enrollment, this AEP, and by next year you'll decide if you want to be in the business big time. Do the same thing with short-term medical, do the same thing with ACA, and I think then once you have that business plan, figure out the technology plan to support it. Because if doing so many new things is scary, it's probably because you don't have the tech to back you up. Doing new things should be easy with the technology. That's why you have it.
Okay. Jeff, Susan, anything to add?
Well, I think the other thing, in addition to get ready for product changes, we have a unique opportunity, not sounding like a Republican or a Democrat either way. There's an opportunity to reset the dialogue about what our practice, our industry does. There's no junk insurance. There's insurance that people choose that doesn't cover things for a lifetime. Doesn't make it junk. There's bad practices, let's clean them up within an industry. Let's reset the dialogue of what we do. We help people solve their pain points. We provide them valuable protection. We give them good guidance. Those are the things that I think we can reset as an industry now that there's a little more willingness to listen to those messages than there had been in the past. And I'd encourage everybody, write your letters to the editor, get your message out, celebrate the victories for your clients when you paid $10,000 or $15,000. Go to the NAIC meetings and help them understand the real world impact. Those are things where change can happen. And it's time for us to play offense. We played defense for the last 4 years, and the other team scored points. Let's be a great. Let's score a lot of points and play offense in the next couple of years.
Anybody else? Anything? All right. Well, Jeff, I'm going to throw back to you another question to you. As the health insurance markets face reduced competition from government platforms like healthcare.gov and medicare.gov, how can companies leverage innovation in technology, marketing, and customer experience to differentiate themselves and create lasting value?
Is that back to me?
That's back to you.
Okay. Well, I think you have to embrace certain technologies in the right place. AI, all sorts of applications for it. I think it replaces a lot of what I used to call fronters that were not licensed agents but would screen people and move them toward a licensed agent. That's all something that can be AI enabled. One of the things we also have to look at is how we communicate with our customers. You have people coming off of Medicaid, you have people coming off of original Medicare. You communicate with some of those people differently than you would a more sometimes intelligent, sometimes better health and educated group. We need to, have your home address is your telephone number, because some people in the lower income stratas move so many times you can never find them again. But they keep their cell phone, and that's their address, is that text number. So I think there's a lot of changes in how we communicate, changes in ways to reach people. But if we believe AI replaces people, and if we believe it can streamline and take out the role we play, try to find somebody who wants to speak to their pastor that instead goes, I'm just as comforted by talking to an AI bot. It's not the same. And we have to recognize the role we play.
Yes, so I would totally agree with you, and especially as we're looking at the senior market. Consumer enrollments are still at less than 5%, which means a consumer, and we call this an unassisted enrollment, where they're not talking to anyone. They're just going on shopping by themselves and buying their plan. So if you look at that, there's all kinds of tools to help consumers today pick their right plan, but they always want to talk to someone at the end. AI is not going to take the place of that. Even compliance-wise, for direct-to-consumer, that's going to take a long time before CMS is going to allow any kind of a bot, a consumer-facing bot, to take place. So I really think, I couldn't really agree with you more. And we really try to find ways to connect with the consumer where they want to be met. So the ways that we know they connect on their phones, on their emails. So we really have enhanced our ability to send quotes, send personalized videos. Personalization is still very important.
Yeah. Very much.
All right, Brendan, as short-term medical plans are likely to be expanded, durations and renewed deregulation, how can health insurance marketers navigate the risks of consumer confusion while capitalizing on product flexibility? And what strategies should companies employ to manage the ripple effects on ACA marketplaces?
Yeah, so that gets to the dynamic that I was talking about, where we will see a reduction in likely see a reduction in ACA subsidies, and that's going to move, people into alternatives. But at the same time, we're going to see a reduction in Medicaid, and that's going to move people to ACA. So there's going to be a lot of first-timers. There's going to be a lot of brand new folks. And, Medicaid used to be easy. You just signed up for it. They didn't call it Part A because it was just Medicare. And then they added Part B, and then they added Part C, and then they added Part D. And there really is not a customer out there who understands any of this. The key in my mind is the agent. And the key to the agent is understanding that they represent, if you're a carrier, if you're a health plan, they represent your product to your member. They are the conduit. They're not a salesperson, right? They're a consultant in that person's mind. And getting a person put into the right product is a huge driver of lifetime value, right? The two things that make our business successful are increasing the lifetime value of a member and decreasing the customer acquisition costs. Both of those things can be supported by technology. Both of those things can be supported by AI, for example, but not by replacing the agent, not by turning it into an Amazon shopping experience where people who like limited indemnity also like a dental plan. That's not going to work. We're so far away from that level of AI to be able to replace the agent or even take a big chunk out of it. But lead management, right? Managing the upfront, just figuring out, is this person, should we be having a conversation about Medicare supplement or Advantage, right? Just that differentiation changes everything about the consultative process. Is this person, the right candidate for a high deductible ACA plan, or should we get them onto a short-term medical? Right? I don't know the answers to those questions, right? The answers are all collectively in our brains and in the data from our businesses. So, AI is a great thing. I love it. It's super exciting. But we're not looking at using it to create, AI agents. We're looking to use it in a lot of little ways, to look at your past enrollment data. So the question was specifically about short-term medical. I know a lot of folks in this room sold a lot of tri-term and a lot of STM over the years. If you've got that data, you can go back and look at it. Where did it sell? To whom did it sell? Where was it well received? Where did it have stickiness and longevity and great persistency? Where was my lifetime value the best and my customer acquisition cost the lowest, right? You can do that just with your own eyes. You do it with AI and it becomes supercharged. You can now tell your agents where to sell that product, when to sell that product, to whom to sell that product, and you're going to end up increasing that lifetime value and reducing your customer acquisition costs.
Awesome.
Well, that's the way I see it.
Jeff, anything?
Yeah.
Okay. So Susan, as consumer behavior evolves, how can agents leverage tools and resources from ConnectureDRX to enhance client interactions and retention in this dynamic environment?
So I started to talk about this a little bit before, and talking about consumer engagement and how consumers really do need the agent. And Jeff talks about the agent being the trusted advisor. It isn't so much as showing them all their options, but really getting to know their consumer. We do help the agents build that trust with their consumers by having their data. And so like this year, we are launching a new enhanced shopping experience where we're pulling in more data on the individual. So when the agent is talking with their member, they're going to know the information about them. And as things are changing, and formulary changes and drug changes, they're going to know all of that information up front. So I think that's going to be a huge advantage to keep building that trust and become the trusted advisor. In addition, like I said, getting the data in front of the agents, so that when they're talking with their consumers, they already know what plan they should be in, or what the plan changes are, or they know what benefits they should be taking advantage of. The other thing that we're doing is increasing our integrations with we have consumer surveys now that go out to consumers ahead of AEP, so we can get that information in. We integrate with many CRMs out there, so that information for the agent is right there, and they have their historical information at their fingertips.
Awesome. So, Brendan, I'm going to ask you the same question. As consumers' behavior evolves, how can agents leverage tools and resources from E123 to enhance client interactions and retention in this dynamic environment?
Nice. Also a not expected wrinkle. I like it. On the surface, E123 is a distribution management system. So it's onboarding agents, paying commissions, managing your hierarchy, it's billing, it's invoicing, it's things like that. But if you think about the data that sits behind all of those transactions, right? An agent completes an application, submits the application, and it's either accepted or rejected. And each agent has a rejection rate. And each agent with each product has a rejection rate, right? And you start to fine tune it, and you start to build it up in your hierarchy. Every agency for every product you sell in every geography has an acceptance rate and a rejection rate. They have a disenroll or a rapid disenroll rate. They have a persistency rate. They have all these metrics that suggest that they are putting members into products that are of a higher lifetime value. So, we aren't really focused on the world where Connecture is in, where they're actively selling Medicare Advantage and in the moment suggesting other things. But we're able to look at the big picture. Where are you investing your commission dollars, your marketing, co-marketing funds, your marketing funds out in the world, right? If you're going to put up a billboard, where are you going to put up that billboard that it makes the most sense, and what product are you going to show? Because by zip code, the answer to that question is going to change, right? So all of that data is in the system, along with every single agent that's selling for you. We have almost 400,000 agents in E123 that used it this year to make an enrollment or check commissions, to update their appointments or their licensing, right? They're in the system. You can interact with them in the system, and you can share that information. So if we have a shared client actually who is doing a really great job on a local basis of competing with some very big names, and you can look at their distribution map, and zip code by zip code, sometimes street by street, there are different results, and they're able to sit down with their agencies and say, here's where you're doing great, and here's where you're doing not so great. Why aren't you doing so great here? And how can we replicate and do more of what you're doing here? So in our part of the world, it's not so much about the member as it is educating the agent. It's about training and giving the agents the attention really that they need to not just make the easy sale, but to make the sale that's going to result in the best lifetime value and therefore the best win for everyone.
Is that a pun on
Well, this will be the last formal question, then we'll open it up for questions from the audience. But Jeff, I'd like you to answer the same question as it relates to flex benefits.
Well, I think one of the things related to lifetime value, we really need to turn the elephant on its head and start having conversations, as I mentioned, about what the pain point really is so that people engage with you and say, I'm afraid of a medical bankruptcy. I'm concerned about medical debt. It may surprise you. 1 out of 3 people, I'm very involved in medical debt through a large nonprofit I helped create. 1 out of 3 people that buy an ACA plan end up with medical debts that they have to report on their credit scores, ruins their credit scores. 1 out of 3 in 3 years. Medicare Advantage, 1 out of 4 in 4 years. Isn't that what they're concerned about? Yes. Why don't we put protecting that, taking that fear and put it at the front and saying it can continue and be a permanent type of coverage? So that's part of what our thesis with Flex. Back to the question a little bit on what agencies can do with data and with technology. There's a lot of great MGUs and great FMOs and agencies that are wonderful at what they do, but they don't append their data. They say, I have 10,000 customers, 1,000 prospects, 3,000 are existing customers, and 6,000 used to be customers. They don't really dig deep enough to find out who really are those customers. Why did those 6,000 leave? You might find that you have female agents that have wonderful persistency with their female customers. Well, why aren't you hiring more female agents? You may find something else different, but it's not just the new technology and AI, but there's a lot of appending of data that'll help you make you a lot more intelligent about your business and help you understand some of the behavioral and customer decisions that drive them to keep their product, drive them to like you, drive them to like or dislike certain types of your agents when crossed with a certain type of lead. I've looked at agencies that had in the ACA market almost identical size. One had a 13-month persistency and the other had a 28-month persistency for ACA plans. And when you dig deep into it, you discover all the reasons that that's true, all the things the one did that perpetrated and continued to have a very poor persistency, and all the things the other one did to have a very high persistency. So utilize those tools. There's people in the room that will help you append data and understand your own business and really look deeply into it.
Awesome. Thank you all. Questions from the audience? Sir, right here. Steve, right behind you.
Yes, Lee Morey with Heartland Financial. I've got a question to get. I want your comments on something. A disturbing trend that we're seeing in my area, as well as some of my cohorts are seeing around the country. Now, there's no question that Medicare Advantage is growing by huge percentages. My company did 45,000 enrollments this year. However, where I live, Mayo Clinic refuses to take Medicare Advantage. Rumors are that our 2 biggest hospital chains are going to stop taking Medicare Advantage. And this has happened in other areas of the country as well. One of my clients called me the other day, and he had a couple that has a condition that can only be treated at Mayo. Unfortunately, they have a Medicare Advantage plan, so they won't accept it. He tried to sell them a Medicare supplement. She doesn't qualify health-wise. So they're stuck in between. What are your comments on the trend toward hospitals not taking Medicare Advantage?
Well, I think you're going to see more of them not taking Medicare Advantage. You know, when you're given a problem, find another way. Why does Medicare supplement only structure and fit in certain capacities? When's somebody going to create a true complement to a Medicare Advantage program that foresees some of those situations? We just have to think outside the box and create new Medicare Advantage tag-along products or solutions. Government isn't going to solve it. We're going to solve it.
So I think there was a question back over here, was there? No? Any over here? Any more questions from the audience? Well, if there are no more questions, we will adjourn. Thank you all for your time.
Oh,
Thank you.
There's one.
Oh, one more? Oh, back here. Okay. There you go.
Hi. As a consumer, what would you recommend? So listening to all of you, I'm a consumer. What would you recommend with all of these changes? Just curious.
what was it?
What was the last part of the question?
What would you recommend for a consumer to learn more about all of these changes that are happening? What would you recommend for us if we're getting prepared to come to an advisor or agent? What can we do as a consumer?
Well,
Go ahead.
I mean, the internet is always a good place to start. I wouldn't take the internet, you know, it's like if you get a disease or a cut, you don't Google it, right? But there's a lot of really good information. Whoever you're working with today, any kind of financial advisor, they should know how to guide you into the Medicare space. And then lastly, just make sure that you get a referral for whomever is going to become your trusted advisor.
Yeah, I would say is the thing for you is to learn. Learn. Learn LinkedIn, wonderful to say I'm connected to you and you're connected to me. But what the value I have is all these brilliant articles that are tucked away that are sometimes hard to find, and these wonderful insights from people. You know, find and learn and read and connect with people and share ideas. They're out there, and there's some brilliant grassroots thinking. You're not going to find it in a government training manual. You're not going to find it in a short article in Forbes. The grassroots stuff we all create is what's valuable, and let's share it.
Back over here.
Oh, we're still going. All right.
Hello. You mentioned ICRA at the top of the hour. I'd love to hear your thoughts on where you think it'll be the next 4 years and 10 years.
I have a bias about ICRA. I was an early investor in a couple of companies in the ICRA market, so I'm a go ICRA guy. But I think ICRA is going to have a trend line that looks a lot like 401ks. We've reached the point where it is now established as a credible option. The data and the technology is out there where you really can zone in an area and say, ICRA is the better solution for blue-collar workers in this county versus a United plan or a Cigna plan. And in some other counties, it may be the opposite way. So it's a niche. It'll grow more if Congress loosens it up a little bit to allow other types of plans to be packaged with it and changes some of the rules about eligibility for subsidies and some of those types of things. ICRA is here to stay. It's a matter of whether it gets a 5% market share, which still is a big damn market. 5% is big. Or it ends up 1 or 2, or if it explodes, it's to 10 or 20. But ICRA is not going away.
Have time for one more question. Back here. Oh. Okay.
So it seems like there's might be a connected piece here. This gentleman here mentioned Mayo declining to accept Medicare reimbursements for specific conditions. She mentioned ICRAs and the expansion thereof. And we also had a conversation about the float between, I believe you said 4.9 and 7.3 between the inflationary trends. So as we see more and more shifting away from private reimbursements into subsidized spaces, do you guys see that as a call towards basically noise? Because this situation where a guy can't find coverage for his wife, he's going to, like, that is a militantly motivated man. Like, that guy's going to do everything he can. That is a news story. So if you have expansion of those through the adoption of more subsidies, is there a breaking point where effectively the private sector can't absorb the implicit subsidy that is being basically transferred through, I don't know, for lack of a better term, political negligence or subsidy seeking?
Well, I can take a short answer to that. If the problem's being redirected towards the creative minds of the private sector are allowed to go beyond some of the gates that stop what we need to do to solve those problems, I think the private sector can get there. But right now, sometimes you deal with, we recognize a problem, we know its impact, but the rules don't really allow us to do anything about it. Medicare Advantage, you're not supposed to have a Medicare Advantage complement. So we could hit a breaking point, sure, but I think it's our job to say, get rid of the barriers that stop us from creating some of these solutions.
All right, well, thank you all. Thank you all for
Thank you all.
being a great audience.